Hey everyone, welcome back to Corporate Decoder, the place where we break down the nitty-gritty of corporate filings to see if these companies are truly booming or just booming us. Today we are looking at First Western Financial Incorporated. Their latest quarterly report is out, and well, let's just say there are some interesting moves happening under the hood. Before we dive in, if you appreciate getting straight to the point insights from these dense documents, smash that like button, subscribe, and join our Discord community linked in the description below to keep the conversation going. So what exactly are we looking at here? It's a standard quarterly report, a 10Q. So it gives us a snapshot of the company's financial health as of the 30th of September of 2025. Think of it like a checkup for the company. It's not a full yearly physical, but it tells us how they are doing right now. Let's jump straight into the numbers, the balance sheet. This shows us what the company owns and what it owes. As of late September, the company owned over $3.2 billion in assets. A big chunk of that is loans. They have over $2.5 billion in loans, and that is after accounting for potential losses, which is good to see. Deposits are their main source of funds, a huge $2.8 billion. That means people trust them with their money. These loan numbers are up from the end of last year, which is generally a positive sign for a bank. More loans usually means more business. Now, for how they actually made money, the income statement. For the third quarter of 2025, they reported over $3.1 million in net income available to common shareholders. That is up significantly from about $2.1 million from the same period last year. That's a nice jump. Their core banking business, the net interest income before accounting for potential loan losses, was a healthy $19.5 million for the quarter, a solid 25% increase year over year. This usually means they are earning more on their loans and investments than they are paying out on deposits and borrowings, and that's a sign of a healthy bank. But here is where it gets interesting. The amount they set aside for potential loan losses, the provision for credit losses, jumped quite a bit. For the quarter, it was $2.3 million, up from just $500,000 last year. This could mean they are seeing some trouble spots in their loan portfolio, or they are just being extra cautious. For the 9-month period, it went from $2.9 million to $4.1 million. That's a significant increase in setting aside funds for bad loans. Their non-interest income took a slight dip compared to last year, but it is still a decent chunk of change at $6.8 million for the quarter. Trust and investment management fees are their biggest non-interest income generator. That is where they make money managing other people's money. Looking at expenses, salaries and employee benefits are up by about $500,000 for the quarter, and that is mainly because of increased bonus accruals. That usually happens when the company is doing well and expects to make more profit. Data processing costs are also up, which likely means they are investing in their technology platforms, perhaps for that digital banking upgrade mentioned. Now let's get into the nitty-gritty of how they value some of their trickier assets, things valued using inputs that aren't readily available in the market. These are called level 3 assets. For loans held at fair value, they use a discount rate that is around 7 to 8%. For their guarantee asset, a fancy way of saying they have some credit risk tied to loans, they sold that discount rate is also around 5%. What is interesting is the volatility in their equity warrants, a financial tool that gives them the right to buy stock at a certain price. The valuation for these uses an input called volatility, and it ranges quite a bit, which can mean a lot of uncertainty in their value. One area where First Western Financial Incorporated is definitely showing strength is in their assets under management. For the wealth management segment alone, they are managing over $7.4 billion. While it saw a slight dip this quarter, a lot of that was due to clients withdrawing money from lower fee accounts. The market itself did them a favor too, which helped boost the numbers back up. Let's look at their loan portfolio composition. Commercial real estate loans, or CRE, are a big part of their business, over $915 million. A significant chunk of that, nearly 77%, is in Colorado, their home state. They seem to have diversified holdings within CRE to covering everything from multi-family properties to industrial and office spaces. It is good to see a decent portion of their CRE is owner-occupied, over $190 million, which suggests businesses are actually using the properties they are financing. So what is the story here? First Western Financial Incorporated is clearly growing its loan book and seeing some profit growth, which is great. The increase in net interest income shows their core banking operations are strong. However, that significant jump in the provision for credit losses is a big flag. It suggests they might be anticipating some loan defaults or are being very conservative, which is smart in this economic climate. But it does eat into profits. Their assets under management are solid, showing client confidence, but the valuation of some of their level 3 assets, particularly those equity warrants, shows a lot of uncertainty. The company's strategy seems to be a steady focus on the Western wealth management client, which is a strong niche market. The CRA exposure is significant, but seems well diversified geographically and by property type. They are also doing a good job of maintaining a strong deposit base, which is crucial for liquidity. Overall, First Western Financial Incorporated appears to be navigating a complex economic landscape with some notable successes and a few areas that warrant close watching. The real test will be how that provision for credit losses plays out in the coming quarters. Alright, that is our breakdown of First Western Financial Incorporated's latest filing U. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.